Howdy, welcome back to another installment of our video series on the economic and legal considerations for hemp production in Texas. I'm Stephen Klose, and this is part 3 of our crop insurance options. And specifically, we're going to be talking about whole farm revenue protection, nursery crop insurance, and a program simply known as NAP. Again, a good reminder for all of our USDA hemp insurance programs. It's important to note that everybody, to be eligible to participate, must be producing with an official certification and a license under the applicable state or local governing authority. You have to be working and growing under a contract with a processor, and you have to be doing things in accordance with the requirements and practices and expectations of that contractor. So you have to be doing things legally, and important again to note that THC testing higher than 0.3% is not an insurable loss under any of the programs that we will talk about. Okay, so to start with, whole farm revenue protection, as the name suggests, it is you are establishing a revenue level across your entire farm. So this covers the total farm revenue from all commodity production. One of the advantages from doing this type of insurance is that you get to an aggregate level of throwing everything into one basket, and so you get some diversification things going on there. And because of that, you have the opportunity to potentially significantly lower your premiums. And also because of that, it is generally best suited, this product is suited for farms that are already diversified or that have specialty crop production. Hemp is eligible, and whole farm revenue protection is available nationwide. Important to note that it is designed for people with lots of different commodities, and that is probably the biggest advantage. But if you only have one commodity, maybe you're only growing hemp, that doesn't necessarily disqualify you. You can still potentially use the product. It will just be more limited, and the advantages are not quite as much as if you had multiple crops. A few limits that are worth noting: you can't insure total revenue more than $8.5 million, and you can have up to $2 million in revenue that accounts from animal or animal products. Similarly, you can have no more than $2 million in revenue from nursery or greenhouse revenue. And then specifically, you can't claim or have any revenue from timber, forest products, or animals for show or pets. Or since we're talking about hemp and related items, you can't have any revenue from any controlled or illegal substances. So the way whole farm revenue works is based on your history. You establish a guaranteed revenue or a benchmark revenue, and then your guarantee is a certain percentage of that benchmark revenue. And then it can be adjusted. So you look at your history and your history of being able to produce certain yields and the prices that you've achieved, and that insured revenue for the next year then can be adjusted for example, if you plan to grow more acres of a crop. So you're going to increase the size of your operation. You can adjust that for that increased size or significant differences in expected market prices in the upcoming year. There are provisions that allow for an adjustment to that. Coverage levels range from 50 to 85% of that benchmark revenue for your farm. And in order to establish that revenue, one of the requirements is that you submit 5 years of your farm's tax forms. Records are very important in this case to establish certain levels of production and certain levels of your ability to produce and generate revenue. In the instance where you don't have those records, or in this case you have been producing hemp, similar to our other products, you'll be required to substitute county yields and or other prices, which generally are going to be lower than your expectations. And so this slide kind of gives you a picture of what I was talking about, the advantages of some of the lower premiums. If you have 2 or 3 or more commodities that you are bundling into a whole farm package, you can get up to 80% premium subsidy rates. So you're paying 20% of that actuarial premium. And But again, if you only have one commodity, that doesn't disqualify you, but those premium subsidy rates there for one commodity are going to look much similar. In fact, they are the same as if you were purchasing multi-peril crop insurance, for example. But this might give you if that's your only option and multi-peril is not available to you, this could be an option for you. Okay, so nursery growers, eligibility. Specific to nursery crop insurance, the plant that you're growing, or multiple plants, must be container grown. The plants must be sold with the root system still attached, so you're not harvesting or producing anything from the plant. You're in fact selling the plant itself. You must qualify as a wholesale nursery, and so to do that you have to have at least 40% of your gross income resulting from wholesale market revenue. The other thing that's specific to nursery crop insurance is there are very specific requirements in terms of software that you have to use to manage and track your inventory. There's record-keeping requirements, mandatory inspections, and specific practices that you have to use. Some of this looks quite cumbersome, in fact. So I don't think this is really going to be an option for anybody that's not already probably established as a nursery. I think most likely this will be a situation where it's those folks that are growing hemp plants to sell to farmers for transplant. But specifically the way the program works, it is different from our other crop insurance products in that it is asset-based form of insurance. So rather than guaranteeing a yield or a revenue, you're simply guaranteeing against the loss of an asset value. So you establish your inventory value, and then you have coverage level choices ranging from a very low CAT or catastrophic, or what they call CAT level coverage, which is only 27.5% of your inventory, and then ranging up to 75% of your inventory value. Similar to some of the other products that we've looked at, the subsidy rates then gradually decline and you pay a higher portion of that premium as you move up in coverage. The catastrophic level coverage, however, it doesn't really have a premium connected with it. You simply pay a flat $300 administrative fee to get that basic level of 27.5% coverage. Okay, so finally, NAP, or Non-Insurable Crop Disaster Assistance Program. Eligibility here is the least restrictive of all the products that we've looked at. It is available nationwide, and unique to the other programs, this is delivered through your local county farm service agency office. It is in fact designed for crops that have no other options. So if you're growing a crop that has an option, or if hemp in your county multi-peril is an option, then NAP is not likely an option for you. Another restriction there is if you are a person or an entity that has adjusted gross income that averages more than $900,000, then you wouldn't be eligible. So the NAP program in general, kind of in concept, works similar to a multi-peril crop insurance coverage where the producer has an established approved yield, or if you have a limited history, you would substitute county level yields to establish how much yield you can guarantee, and then losses would be paid at previously determined USDA announced prices. So the specifics of the provision of NAP. There is a basic NAP program, which you could also consider to be that CAT level or catastrophic coverage, where you are covering 50% of your approved yield, and losses would be paid at only 55% of the established price. So fairly low level of guarantee there, but similar to our nursery crop CAT program, you don't really pay a premium here. You pay a flat administrative fee of $325, and that gets you that CAT level of coverage. There is a maximum indemnity per person of $125,000 for that basic NAP coverage. There are then buy-up options to where you can buy up higher levels of your approved yield. Losses would be paid at 100% of price in this case if you pick one of the buy-up options. And there are 4 options there: 50, 55, 60, or 65% of your approved yield. Now the premium here, instead of being an actuarial calculated premium, it's a fairly simple formula in that you pay the $325 administrative fee, and then based on your guaranteed value, so whatever coverage level you choose, times the price that is already announced, your premium then is 5.25% of that guaranteed value, and of course multiplied by the acres that you're covering. And with NAP buy-up, there is a $300,000 maximum indemnity per person. As we've said on the other products, there are other things to consider. Some of the coverage levels are likely to be low relative to your yield and price expectations. So you want to look at this as a way to maybe offset some major disastrous losses, as opposed to thinking that you're going into this trying to lock in a profit level that you hope to achieve. It's not likely to. Those types of coverage are not likely to be there. Understand the types of losses that are covered and specifically what is not covered. So in essence, that's a way of saying read the fine print, understand what is not covered so you don't get yourself in a bind. And as with all of our products, there are specific dates and deadlines before which you need to do certain things. And so you want to start the conversation with those folks sooner rather than later, whether you're dealing with a crop insurance agent or your local county farm service agency office. If you are a beginning farmer or you've been farming for less than 5 years, you likely qualify as a beginning farmer. Not a guarantee, but there's a good chance that you qualify, and you for sure want to ask about that because there are ways to bump up your approved yields and get higher guaranteed levels and reduce fees or lower your premiums. In case you have a loss, there are specific requirements, like there are specific requirements on the front end. You have a certain window of time that you are required when you have to file a notice of loss and inform your agent or the FSA office. And you certainly don't want to do anything with that crop until you find out exactly what your options are. So stay in constant communication with them and document everything that you do so you have good verification of not only that you are doing the right things, but that you indeed have a crop planted. Finally, a resource page again for NAP. If you want to look at Farm Service Agency, you can just look up FSA, USDA, and NAP, and that will get you to the landing page for NAP. Or for the other products, which Whole Farm Revenue or the Nursery Crop Insurance, look up RMA, USDA, and there are some useful tools there to help you find an agent or estimate some costs. Or the last one there, if you want to look up specifically about hemp, there are some really good press releases and fact sheets and frequently asked questions. So that's all we have on Whole Farm Revenue and Nursery Crop and NAP coverage. Appreciate the opportunity to be with you. If you have any questions, I'd be glad to hear from you. My email address is there. And if you don't mind, the next slide will give you a QR code. And if you would scan that and go to our survey, we would certainly appreciate any feedback that you give us on the education videos that we put together. And we want to thank our sponsors, and we know they would also appreciate that feedback. And specifically, that is all of us are with the Texas A&M AgriLife Extension Service, and our sponsor is the Southern Extension Risk Management Education Center.